Okay, great. Thanks, Reed. I appreciate it. To everyone who who's given me this opportunity to present this morning, bright and early. So it's probably the earliest I've ever done a webinar. So that's really cool. I slammed down a quick cup of coffee, and like Reed was saying, I was strumming a little bit on my guitar. I didn't actually think I was unmuted. I mean, I was just yeah. But anyway, so yeah, just excited to be here. Excited to be presenting to you guys this morning. And man, I was looking at kind of off topic. I was looking at some of the presentations from yesterday. I was like, man, these guys are sharp. I need to bring my A game. So that's exactly what I'm going to bring for you guys this morning. Here bright and early on the East Coast in the United States of America. It is just about 9 o'clock in the morning. So uh, depending on where you're at, it's maybe a little bit different time, but I'm glad that you're here with me to spend this chunk of time with me. And I'm going to do my best to make it the best hour of your day, the entire day today. All right. So the title of my presentation is Rapid Account Growth with SPY, QQQ, and GLD Options. And judging by the content of the presentations yesterday, I know I have a lot of options traders that I'm talking to today, so that makes me really, really excited, right? Because a lot of people say, "Well, I just trade stocks, and I never really got around to options." So God bless those folks, but man, I really love talking to options traders, right? So, anyways, let's go ahead and get started. Again, my name is Matt Morris. I live in Columbia, South Carolina. I have 5 kids, and just a little quick bio on me. I grew up in Toledo, Ohio. I joined the Marine Corps, and I did 4 years in the Marines from 1997 to 2001, and then eventually found my way to where I am now, trading and as a financial publisher. All right, so bada bing, bada boom. We got to do the disclaimer. I think Reed already had one up before the webinar, but here's mine. So you guys give it a quick glance, and we'll move on. All right, 3, 2, 1. All right, so I have a specific trade I want to share with you guys. Okay, if you stick around to the end, I'll give you the a specific trade kind of format to look at and to that you'll be able to remember, or if you write it down, you can look at it when the time comes to place this trade. Okay, so that's kind of a little super bonus for the end here. You stick around to the end. So, but what I want to do, guys, is I want to ask you guys a specific question. How many of you have watched a stock or an ETF and felt so confident about it that you went out and if you thought it was A going up, you went and bought call options, nothing fancy like call spreads or butterfly, just plain calls. Or if you thought it was going down, you went out and bought puts to hopefully multiply your gains, right? Go ahead and type that in the chat box. So maybe say, okay, I saw on the chart it was a bull flag, so on the daily chart, so I went and bought calls on Apple or calls on the SPY or calls on something, right? And vice versa, maybe you saw, hey, it's a head and shoulders pattern, so I'm going to buy puts on this stock or ETF thinking it's going to go down, right? How many have done that? Right. So a lot of you have done that, right? No doubt. I used to trade like that too. So I want to, go ahead and just put my cards on the table before we talk any further about that particular scenario. So to be totally open and transparent with what, I bring to the table this morning, guys, is again, like I said, there'll be a specific trade with ticker and everything revealed towards the end of this webinar. And at the end, there will also be a special offer towards the end of the webinar as well that adds value to the free information that you're going to learn, right? So you're going to learn something, you're going to learn a new strategy, probably new to most of you anyways. And there will also be an offer that adds value to that free information, okay? So it's going to be a sweet, sweet time. It's going to be just a great, great time to spend together here during this hour. All right, so how many of you ended up losing a significant amount on those trades, the ones I talked about 2 slides ago, where okay, Apple's going up, so I buy calls, or Apple's going down, so I buy puts. Well, how many of you end up losing a significant amount on those trades, or even lost it all as the option expired worthless, right? You know how it goes. You're so convinced about a trade, so you think it's going up, you buy calls. You think it's going down, so buy puts. Okay, the first day, okay, it didn't go my way. Second day, well, starting to get a little concerned. And then the third day, maybe it just totally goes against you, and your calls or puts are almost bidless, right? And so you're just like, man, I don't even want to bother selling them. What's the point in selling them? the commissions to sell them are going to cost more than the amount that you get for selling them, right? So that's just the way it is though sometimes, guys, right? Your options expire worthless and when you're wrong about a direction of a trade. So it can be really frustrating, costly, and emotionally draining. Like this guy here with his face buried in his hand. It looks like he's been kind of pulling on his hair. Just a lot of stress and disappointment and anguish, right, that he's feeling in this picture. And I think this, pretty much describes how, options traders can feel when they try to pick a direction and they're wrong about the direction that they picked, right? So how many of you ended up losing, a significant amount on these types of trades? You think something's going up, you buy calls. Oh crap, I was wrong, right? You lose it all. Or vice versa on puts, right? As the options expire worthless. I recently read an article, guys, this morning. I was just, reviewing this article. And so this guy lost 250 grand in just a few months in options trade. I'm thinking like, okay, maybe this guy was a billionaire and this is pocket change to him, but most likely it probably wasn't. It was probably a good chunk of his savings, if not all of it. I'm just wondering, what would he tell his wife? What does his net worth look like after that kind of huge, hit? So you really got to be careful, guys, with options, because they can really hurt you if you're not doing it the right way. So I'm bringing this subject up because it is a reality most traders need to face before they get over the hump, so to speak, of profitability. So the way I trade options now virtually eliminates the possibility of blowing out my account, by picking the wrong direction. Okay, so there's always still risk involved with trading options, right? But now I eliminate the risk of blowing it out by picking the wrong direction. Okay, so I'm going to show you exactly what I mean here in just a moment. Now, with that said, who is ready to see how I plan on helping you rapidly grow your account by trading SPY, QQQ, and GLD options in a profoundly unique way? Now, I say unique, having looked through the presentations that were given yesterday. They were really good, by the way. My compliments to those guys. But it's unique because, what I've seen so far is a lot of guys talking about butterflies, call spreads, bull put spreads, stuff like that. And the way I'm going to teach this morning is unique compared to those methods. So who wants to see what I have, what I've got up my sleeve for you, so to speak, as far as the strategy that I'm going to be teaching? Anybody awake this morning? Take a drink of water here. All right. Okay, guys. So, right. All right. So I'm actually going to do better than that, though. I'm going to reveal an upcoming trade to you and also show you how to get my pinpoint buy and sell alerts for this trade, both via email and text alert. So I'm going to show you the strategy, and I'm also going to show you how to get my alerts on these trades into the future, okay? Because there's always new trades. It's a great thing about the market. There will always be new opportunities. So before we can get to how you can receive my alerts for these upcoming trades on SPY, QQQ, and GLD options, guys, let's review the events I trade these options around and why I'm so confident about continuing to make these trades and alert them to subscribers of my Fed Trader Service. You might say, Fed Trader Service, like what the heck is that? Well, you're going to see why I call it that here if you just stay tuned for a few more minutes, all right? So here's the first event. All right, guys, so this is where you need to start taking notes, okay, as a side note. So the first event that we're going to trade these options around is the monthly jobs report. Now, in most cases, some months are a little wacky, but usually about 90% of the time, the monthly jobs report comes out on the first Friday of every month. So what usually happens on jobs report Friday? Well, the SPY, QQQ, and GLD ETFs all do one thing. They either go up or down substantially, usually. They seldom do nothing or go unch on the day, right? Who knows what unch means, right? Unchanged, right? So they usually make a move either up or down in a substantial way that Friday, because that data that is released at 8:30 Eastern every Jobs Friday morning, right? So the first Friday of every month is very, very pertinent to people's sentiment about what the market should or should not be doing. So it's gonna have a binary reaction one way or the other. So let's continue on. So does Matt try to predict which way markets will go on Jobs Report Fridays? Am I here presenting to you this morning because I say I've figured out the magic holy grail about which way the market's going to go on Jobs Report Fridays? And the answer is no. But I use a trading strategy that allows me to profit when markets go up or down. Go up or down, right? So no typo there. I don't try to predict which way the SPY or any other ETF is going to go on Jobs Report Fridays. I use a strategy that allows me to profit if it goes up or down in a substantial way. So does anyone have a guess on what type of trade I use to profit off of a move up or down, right? And I'll go ahead and cue the Jeopardy music for you here. Just kidding, I don't really have Jeopardy music, but so who can tell me, you know, what type of trade I use to profit off of a move up or down? I don't know if I can see all the chat responses or not. They might be coming in the questions box. Let's see, I'm not really sure. Okay, there they are. All right, sorry guys, I was just kind of navigating my way around here. All right, so yes, Miklos says straddle, correct. Walt says you can use spread, sure, but you know that's not the way I use it. The way I trade it. Strangles, Bob says strangles, that's correct. I don't do the iron condors. I'm sure there's a way you can use them, but okay, straddle, James, Harvey, Mark says strangle, straddle, strangle. Okay, so all you guys are correct. So there's some sharp traders in here this morning, guys. I mean, you guys probably have all kinds of complex options, you know, strategies that you're used to trading, and that's awesome. So what I'm sharing this morning is using a straddle or a strangle, okay? So it's basically, guys, I know some guys will sit there and tell you about Greeks and all that and all this fancy stuff, and hey, that's great, you know, but the way I look at it is it's just buying calls and puts at the same time. That's all it is. It's not that complicated, right? So all a strangler or straddle is, there's a little difference between the two, right? But essentially all it is buying calls and puts at the same time, right? So I get messages from people, oh man, I don't know if I can do straddles and strangles because, you know, all I can do is buy calls or buy puts and that's it. I can't do anything fancy. And so I tell them, look, all a strangle or straddle is buying calls and puts at the same time, right? All right, cool. So are you guys ready to see how some of these trades panned out for me, right? So who here wants to see, you know, real case study trades with proof of the executions and, you know, my profit and loss and things like that, right? Because hypothetical is nice, but we want to see evidence of real execution of a strategy, right, to prove that it's really worthwhile, right? All right, cool. All right, so everybody's typing in yes in the chat box. I appreciate that. Let's go ahead and share these trades then. So the first one I want to share is from April of last year. So this was actually for the March jobs report, right? Because they compiled the data for the previous month and then presented that first Friday. All right, so check this out, guys. The jobs report was 103,000 jobs created versus 193K expected, so it wasn't that good. Kind of meh, right? So I placed a trade on GLD and QQQ. Now I bought the GLD strangle, as you can see, my execution is there for 136, and I ended up selling it for 132. So between the calls and the puts, it just wasn't that big of a move on GLD. So I ended up with a small loss on GLD strangle. Bought for 136, sold for 132. And then I also bought a QQQ strangle, and I bought that one for 466 and sold it for 545. So the gain on my QQQ strangle, you know, kind of swallowed up the little loss I had on the GLD strangle. So a good trade, not great, but hey, you know, in and out overnight, you know, it's fun, it's action packed, and it works. All right, so jobs report number 2, the trade number 2 that I want to share this morning. So I'm just kind of randomly sampling it. I jumped from April to January just to kind of show you, and hey, I do this every month. So January 4th of this year, So this was the December jobs report. So the screenshot up here that I saved for you guys, it shows that there was 312 jobs created, 312,000 jobs created. So a really, really good jobs report. And so you can see SPY gapped up and then surged higher in late morning around 10 a.m. Eastern time. So I bought a SPY strangle on this particular jobs report at $3.14 and sold it the next day at $4.13. Now, in all actuality, I sold early because the markets kept surging, but whatever. So I want to be in and out. I buy it right before the closing bell that Thursday, and then I make my move to get out usually within the first hour or two on Friday morning. Okay. All right. So that's jobs report trade number 2. You can see my trade executions there and everything in the nice little chart I saved for you. Jobs report trade number 3. Now this one was, like, hey, 25, what was that, 30%, whatever. But this one's really cool because this is goes back a little ways, back to 2016. But what happened was there was a jobs report released, guys, that was only 38,000 jobs when the market was expecting 162,000. So this is back during the election cycle, if you'll jog back your memory that far. And the jobs report was disappointing. So what happened was GLD, the gold ETF, skyrocketed higher because, what does the market think if jobs reports are bad? Oh, crap, the economy's in trouble. Let me go ahead and add some gold to my portfolio in case we're on the cusp of a recession, right? So uncertainty usually brings buyers into gold, right? And so we all know that right here, guys, because you guys are sharp traders. So GLD had a huge, huge move pre-market, and I saved that chart. You see those huge green candles right there on your screen, and that's what GLD did pre-market. It was up about 2% pre-market. So the day before, I bought GLD. I bought a GLD strangle, 116 calls, 115.50 puts for 75 cents. The next morning, I sold the calls for $2.31. So huge 180% ish win, right? So that's the power of getting in these straddles and strangles right before a huge catalyst hits, right? So I'll just go ahead and say it. Playing straddles and strangles every day, the market's open, you'll end up losing. So that's why I have to use this special kind of formula. And I have a whole training course that I'm going to tell you about here at the end that explains my methodology behind this, right? So just a huge trade. Here's a comment I left about this trade for my VIPs, and so I was just commenting about my trade there, kind of thinking out loud. And one of my traders, Viraj, he said, "I'm still in awe of your trade. One of the best, if not the best, short-term trade I've ever seen." So that was just a really, real cool experience to trade that myself and also share it with my subscribers, right? So now looking at the results that you just saw, guys, you might say, Matt, what if I only have a small account to trade options with, right? Maybe you don't want to, maybe you don't want to, risk a huge chunk of your savings on options trading, especially options trading that you're not a strategy that you're not familiar with, right? And that's totally reasonable and it makes sense. So what if you started with a trading account of say $1,500? Well, let's kind of rewind the trades that I just shared and look at what the results would have been if we would have been trading these, making these trades with a small account of $1,500. All right. So trade 1 was 20%. Okay, 1,500 to 1,800. That's fun and exciting, but not not huge. So trade number 2 though is where it starts to get interesting because then we make 25% on that one. So an $1,800 account goes to $2,250. Okay, so now we're making progress. And then trade number 3, we hit a huge winner, 180%. And so a $2,250 account goes to $6,300 literally overnight, right? So to be continued, guys, because we have more, I have more strategy to share with you. Because jobs reports aren't the only event we can trade successfully as quote unquote Fed traders. Now, let me back up a little bit. So the reason I trade jobs reports with these strangles and straddles, and I'm calling these kind of Fed trading events, because the jobs reports are something that is closely watched by the Federal Reserve. and they are a big part of their policy. So we know that the market basically trades not only on the economy, but also what kind of stance the Federal Reserve has taken. So you might say, well, Ben Bernanke was a lot of the big reason why we had such a big market move from, say, 2011 to, whenever it was that he was relieved by Janet Yellen, because the economy wasn't that great. And I would say you have a pretty good argument there, right? So the market, there's that saying, and it's really simple, but it's really good one to remember, is don't fight the Fed. You're trying to be a bear in a market where the Fed is being accommodative, being easy, so to speak, to keep the market, flush with cash and buyers, then you're going to have a hard time being a bear, right? So you don't fight the Fed, guys. Okay. So we trade these straddles and strangles based off of events that the Fed is going to take into consideration very strongly, and we also trade Federal Reserve events. The biggest one being the Federal Reserve rate decisions, which come out every few weeks. All right. So here's one I screenshotted back from a couple years ago. FOMC rate decision. So Federal Open Market Committee was what it stands for. And I've traded these events, guys, many times. And here's a sampling of the results. All right. So let's roll. All right. So the first one I'm going to share is a recent one. So I bought a QQQ. Let's see. Is that a strangle or a straddle? Let me check. Yeah, that was a straddle. So I bought a QQQ straddle at 414 just before the Fed rate decision came out at 2 p.m. On a Wednesday. It's usually always on a Wednesday for whatever reason. And I went ahead and placed that trade, that straddle, as you can see the screenshot there from my trading account at 414. The market kind of whipsawed a little bit, but it did end up tanking. And it actually ended up tanking for several days. So if I'd held these puts, guys, I would have been, just having a huge winner. But anyways, I sold them pretty quickly because the market just really had a big bloodbath that day in December. So I sold the puts at 6:30. So I bought the straddle at 414, sold the puts. So I'm already in the black just by selling one leg of the straddle. So you might say, Matt, what about the calls? Well, to be clear, I just let them expire worthless. They went bidless quick, right? So it's like, it's one of those things where, do I want to try to sell something that's going to cost me more to sell than I'll generate, or that'll cost me more to sell in commissions than I would by generating, by actually hitting the bid, right? 1 cent bid or whatever it is, half cent. So anyways, I hope that makes sense. So I can make more on the winning leg than I pay for the entire straddle, which is what makes this so powerful, right? As long as you're using this kind of formula that I'm sharing with you right now, where you trade them around the events that are big Federal Reserve related or specific Federal Reserve events like the rate decision is, okay? So pretty cool stuff, right? And there's the chart from that day in December. And it says on the screenshot there, the Fed lowers projection to 2 rate increases for 2019, but the market still wasn't happy yet, like it did get happy in January. So second one I'll share is a little older. So from 2017, I bought a GLD strangle and I paid 108 for it. I sold it for 162. So there's the chart from that day, and there's my proof of my trade executions. So a pretty nice trade there, guys. Again, I made 162 on the calls, and I bought the whole strangle for 108. So it doesn't matter what happened to the puts, right? Because I made enough on the calls where I didn't really care that I had worthless puts. Here's the text alerts I sent on this trade. So you can kind of look at those real quick. I send the text alerts to my Fed Trader subscribers. I bought the GLD 114, 150 call, 114.50 put, 115 call strangles on GLD. And then later that day, I said I sold my puts for a loss as GLD looks bullish after Fed holds interest rates unchanged, excuse me. And then next morning I give a heads up, look, everything's looking good. The calls are up nicely. I'll be looking to sell my calls as soon as the market opens. And then boom, I sent out the alert. I sold my GLD calls for 162. So just a great trade there all the way around. And my Fed Trader subscribers will walk through the entire thing. Okay. So third one, Federal Reserve rate decision trade number 3, numero trace, right? For all my my folks on here that know a little Spanish lingo. So this was a GLD strangle as well. So it's usually a strangle. Once in a while I'll do a straddle, but it's usually a strangle. So I bought it for 105. Sold the puts as a losing leg for 10 cents, and sold the calls at 263. So a huge trade there, over 100% winner, probably 150%. Right. So here's the text alerts for that trade, laid out in plain English, as you can see. No kind of gobbledygook, right? Language that you have to decipher. I try to make everything as clear as day, even if someone's a newbie options trader, that they can understand everything that I'm doing. All right, and that's what I do. I share exactly what I'm doing. All right. So the fourth one that I want to share, and then we'll move along and get more specific on what this means to you. So I bought a GLD strangle again for a Federal Reserve rate decision. And that's where it came out, where the arrow is pointing. You see that huge downdraft lower. So I bought the strangle for 104. I sold the puts at 134, and I sold the calls at 128. So I don't know, probably about 45 to 50% winner right there. And again, the text alerts are laid out. Okay, so everything is spelled out, and then of course they also get email updates too. I think I have some of those on the slide here in a second to share with you. So everything is spelled out, guys, for traders who subscribe to my Fed Trader service. And hopefully you can see by now, this is a pretty unique way to trade events that are pertinent to the Federal Reserve's view on policy, right? Or are exactly that, their dissemination of their policy, which is the rate decision, right? So based on these four big winners, guys, these interest rate decision trades that I've shared, on the first one, you'd be looking at 50%, the second one, 125%, the third, 150%. And the fourth one, about 55%. And most of these trades, guys, are closed out, in and out within 24 hours. Some of them ended up being day trades, but most of the time I'll end up holding them overnight, right? So let's visualize. Remember that from those first few trades from the jobs reports, our 1,500, hypothetical $1,500 account turned into 6,300, right? So now let's continue that account with these four trades that I just shared hypothetically, okay? See where we're at. So trade one took us from 6,300 to 9,400. Trade two took us from 9,400 to 21 grand. Trade three took us from 21 grand to 53 grand, right? And trade four took us from 53 to $82,000, right? So imagine it, 1,500 bucks, a little grub stake, right? To 82 grand, right? Trading, looking at your calendar and exactly when your trades are, right? And, if you were to subscribe to my service, you would get those alerts straight to your phone or to your email inbox, right? So, I have to say, of course, this is admittedly the best case scenario, right? But you guys hopefully can see the power behind this, right? Let's take a look at that slide again. Chris Farley wants to take us a look again. So, again, guys, 1,500 to 82 grand, pretty powerful stuff, right? Because this is disciplined trading. This isn't willy-nilly by the seat of your pants. I think SPY looks bullish today. I'm going to buy some calls. No, it's not like that, guys. We're using this strategy around specific events that allow us to make money, even if the market goes up or down. And in a lot of cases, I laugh to myself, guys, because you know what? I'm wrong a lot of times on what I think the market's going to do, but I still make money. So it's really, really fun and powerful. So I'm constantly on the. So you might say, well, is that it? Just the Fed rate decisions and jobs reports? No, there's more action, guys. I'm constantly on the hunt for new events to alert to my Fed Trader subscribers. Just like when I discovered a CPI data release that was really important to the market. There's some months where the market could really care less what the CPI is going to be. But, if you keep your ear to the ground like I do, you can kind of figure out, when the market is hotly anticipating a CPI like it was in this case, right, back in February of last year. So this headline from CNBC kind of gave that away. Market on its toes for inflation report that could change everything. So I went ahead and placed a trade on that. I bought a GLD strangle at 132 and sold it for 203 the next day. So awesome trade there, guys. All right, now I have to admit, if you stuck with me for the duration of this webinar, or maybe if you hopped on when I was already started, you probably just received a crash course on how I trade Federal Reserve events. So, I pretty much revealed my secret sauce, guys. I mean, I didn't explain it in depth like I have a course, I'll tell you about it. And you didn't go through the course, but you got kind of a crash course, right? So you probably, guys, to be perfectly clear, could go it alone with what I've just shared with you and do just fine. But there's also a good chance that you'll make a costly mistake that you wouldn't have made if you had an experienced trader by your side, such as myself. All right. So with that said, how many of you would like for me to spoon feed you my buy and sell alerts for the next round of Fed trades in real time, so you're positioned for yet another huge trade, maybe 50%, maybe like it says on the screen, 100% plus, whatever, both via email and text message to your phone. So it's like, email is great. Hey, it's kind of outdated technology, but we still love it. We still use it. But the cool thing now is text alerts. Oh man, I know I can't miss a trade if I get a ding on my phone, right? Ding. I'm not going to miss that, right? You'll see it within moments of that hitting your phone, and you can look at that briefly on your phone, and then go check your email for a further description of what's going on, right? So who here is interested in me telling you exactly what's going on, right? And sharing exactly what I'm doing when these events take place, all right? So yes, yes, yes. Okay. All right, so a lot of comments are flying in. I see a lot of yeses though, so I'll keep going. So that's great that you guys are interested. So I want to introduce you now the Fed Trader Service and the $1,500 account challenge. So let me explain. So here is how the service works, Fed Trader Service. So for the January 2019 jobs report, I want to share with you exactly what I sent out via email and text. All right, so I sent out an email in the morning so that everybody's prepared, because you can kind of forget about this stuff if you're not paying attention. That's what I'm here for you though, so you guys don't forget that these trades come around like clockwork. Okay, so I sent out an email on Thursday morning, the day before the jobs report. Said, hey guys, be prepared, because later this afternoon there's going to be a trade out that I'm going to send out on SPY or QQQ. So I don't just send the trade out, at 3:52 p.m. And you're like, oh crap, oh, it's job report Friday, oh shoot, let me log in, oh shoot, right? So that way you're mentally prepared for that trade alert to come out sometime in the afternoon. And I also sent a text. Okay, so here's the actual alert for the trade. I bought the January 4th expiration SPY 246 calls and 245 put strangle at 314. All right. So I have some commentary on there, and I also sent the text alert. So here we go. Fast forward to the next morning. Jobs report is out. Boom, great numbers today. 300K jobs created versus 176 expected. SPY is rallying big time. So I laid out what I did. I sold my SPY puts at 38, and I'm holding my SPY calls with a stop loss at 220 for the moment. And then I also, sometimes I buy these kind of extender trades where after I close out the straddle or strangle, I'll buy some calls or puts based on the direction the market's taking after the jobs report to kind of, play that follow through, right? And so that's something that you'll get as well. I didn't really cover that in the strategy session, but we had a few minutes ago. But so just to let you know, so there is a lot of trades. So I laid that out also in my text alert what I was doing to manage the strangle. And boom, here we go. So the market is rallying hard due to Jerome Powell. Jerome Powell, of course, is the current Fed chairman, right? I sold my SPY calls at 375 after selling puts at 38 cents. So I have a 30% overnight win on this strangle. So boom, there it is. It's wrapped up. 30% profits in my account, and also sent via text alert, as you can see right there. Okay. So here's the details, guys. You can join Fed Trader Service right now at a special webinar only offer rate. We'll talk about it here in just a second. And also use an account of $1,500 to get started with the trades and see how fast you can get to 10K, 20K, or maybe even 6 figures, right? Then this is how it works for the $1,500 challenge. The first one to send me proof of the biggest account growth with Fed trades will be publicly honored via some kind of webinar or video, I don't know, to other members of Fed Trader Service, plus receive a special gift box in the mail from me. All right, so just to kind of keep it fun and interesting. All right. And then also as a huge bonus, guys, you're going to get access to the 24/7 available members only area where you can go through the Fed Trader system, so you'll be up to speed and confident on the strategy, right? So the next time it comes, oh, I just got that email, boom, I just got that text from Matt. I know the trade is here, but I've also seen that I went through the course, so I'm confident, and you're ready to make the trade, right? So the course will walk you through everything, right? Kind of from zero to trader kind of standpoint, right? So you guys got a crash course again during the webinar today, but this will kind of let you go more in depth, right? The course. So that's a bonus if you sign up for Fed Trader Service, you get the course as a bonus. And since these are my favorite trades here this morning, guys, I'm doing something that I've never ever done before. Because you can lock in a full year's worth of Fed Trader Service plus bonuses, not for $2,997, right? So let me get that strike through 10. And so not for $1,997, right? So, I think that would be probably a reasonable price. You could probably make that back on your first 2 or 3 trades, pretty quickly. But it's not $1,997 either, okay? It's not even $1,497. Guys, you can get a full year of Fed Trader Service for just $497 at TradeThirsty.com/Fed. And I'm not sure if they're going to drop that link in the chat box for you guys either, as well. I mean, hopefully they will. But anyway, so TradeThirsty.com/Fed. And you guys can go ahead and grab this offer, right? It will be through the TradeThirsty special link that I've just presented to you and spelled out. Or you can do 6 months. You say, well, Matt seems like a pretty cool guy. Seems like a harmless, lovable fuzzball, and everything, and that's a really cool trading service. But I don't know if I want to give it. So if that's what you're thinking, then you can go ahead and just get 6 months worth for $297. So of course, there's a little more value in getting the full year for $497 because you save about $100, and plus you get 6 months more of service. So so let's look at some testimonials. So this is just a handful that I screenshotted to share with you guys this morning. This is from Mark Kaufman. He said he had an overnight winner of 50%. He was using just a small amount there, so he said he got $400 profit. Bill says I got in 24 hours, I got about 43%. Jim says here on a Fed rate decision trade, he replied to my email alert and said, wow, what a trade, net profit of 174%. A few more. Brian said, thanks, Matt, great trade. Sold my calls at 158. I made about $1,600. Bill says here, oh, that's kind of redundant. That's the same one from the last page. Oops. Okay, so Charles said, I bought the strangle at 71, sold it at 202. Thanks, Matt. That was on a GLD trade. Here, Shane says, I paid 85 for the strangle, sold at 132. A sweet $3,700 in profit on a Fed trade. Jordan says, or Brad says right here, he says only had enough cash to trade one stock. I think he meant options there. So I went with gold, and it hasn't been a better performer than SPY for me. Big win. All right, so good feedback there. Tom says I sold mine at 187. Made $1,500 overnight. So that's one of the cool things about there's a lot of cool things about this strategy, guys, and this service. One of them is that a lot of the trades are in and out overnight. And another thing that I really kind of just get tickled about is that I think we all have an opinion what the market's going to do the next day. And a lot of times I'm wrong, but I still make money. So it's just kind of funny. So as a track record, you might say, well, what's your track record, Matt? Well, the track record, 45 wins, 22 losses. I'm not sure what that percentage is, but there are some losses for sure, right? But with straddles and strangles, your potential to make money is really unlimited, right? Your loss is limited because you can't lose more than you risk, right? Unlike options strategies where you sell, right? Or you sell to open, like a credit spread. Your losses can get pretty nasty there. So you only risk the amount that you're laying on the table here for these straddles and strangles. Okay, guys? Again, TradeThirsty.com/Fed. All right, and I'm willing to put the risk on my shoulders guys here this morning with it 100% quote unquote, dang Matt, you were right, money back guarantee. So if you aren't saying to yourself, dang Matt, you are right about the Fed Trader Service, and if you don't see the potential it has to generate consistent big winners for you, just let me know within the first 30 days and I'll send you a prompt refund. Okay. And I also have a second guarantee for Fed Trader Service. If the Fed Trader Service doesn't provide you with at least 12 trades that give you the opportunity to double your money in the next 12 months, I'll apply a $500 credit to your account applied to your next year of service. So if you want to stick around for the whole year, it's like, man, I just, whatever. I wasn't impressed, or you say, I want to go ahead and take advantage. You email me, you say, I want to take advantage of guarantee number 2, and I'll apply a full credit to your account so that you get another full year of the service at no cost to you. All right. And you'll still have $3 left over in credit. So, I want to update you here. So I shared a lot of trades, but let me share the most recent ones here for the rate decision and the jobs report. So January 30th and 31 was the Fed meeting, the most recent Fed meeting where they came out with the rate decision. And here's the recap. So I bought a QQQ strangle here at 292. Hopefully you can read that. And I sold the puts as a losing leg at 95 shortly after the Fed rate news. And then I sold my calls the next morning here at 354, making it a nice 50% overnight winner for Fed traders. So I cut my losses on the puts the day of, and then sold the calls the next morning. So bought for a total of 292, sold for a total of what is that? 350, whatever 354 plus 95 is, guys. Okay, so a nice 50% winner on the Fed rate meeting and decision in late January. So pretty recent. On the February 2019 jobs report trade recap. So here we go on that one, the most recent jobs report trade. So I went ahead and bought a GLD puts at 58 and 75. I sold them at 75. So I actually didn't use a strangle or a shadow there because gold hadn't been reacting very well on jobs reports. Just sometimes it goes through seasons of change, guys, right? So that's why you need me here by your side, because I got my ear to the ground on this stuff. And sometimes GLD can be really wacky. It can be the best performer, either up or down, or it can kind of not want to do anything. So I stay tuned to those developments, and all my Fed traders are privy to that information and that opinion from me. Okay, so I also have another special bonus. If you go to TradeThirsty.com/Fed, right, you can get either a full year for $497 or 6 months worth for $297. Is that you'll get instant access to my online DVD, Look Over My Shoulder Live Trading with Matt, a $197 value for free. All right, so I'll send you instant access to that online DVD. So it literally would be like if you're standing over my shoulder for a full day of live day trading, and you learn everything that I do. It's annotated, it's edited, all that jazz. Okay, so that is exclusive for the Trade Thirsty / Webinar Expo webinar that you're a part of right now. All right. So who here has questions? Again, $497. I think I still have 19 minutes. So $497 for a full year worth of Fed Trader Service, plus the bonus course, plus the bonus DVD right here, or 6 months for just $297. So you still get access to the course and the bonuses if you grab the 6-month membership. All right. So to claim your spot, type in this URL, TradeThirsty.com/Fed. All right, ladies and gents. All right, let me see if I can make this question thing bigger. I can't read what you guys are saying. All right, I did show a mishmash of trades, recent and some from, a year or two ago. So you guys see, I've been doing this for a long time. So covered the track record, 45 winners, 22 losers. So about I forget. It's a little over 60%. So aren't options very expensive prior to news because of the IV spike? Okay, great question by HR. So that question, the answer to that question, at least in my opinion, from my standpoint of looking at IV and stuff like that, and the costliness of options, is that if this strategy works, I get questions from people. Why don't you just go buy straddles and strangles on stocks every time they report earnings? And while that seems like it might work, sometimes it does, but more often than not, it doesn't, because market makers are smart enough to know that people are going to be trying to gamble on earnings. So what they do is they make the cost of those straddles and strangles so expensive that unless there's a huge move on those stocks post earnings, it'll be a money losing trade. So the reason this is different from that, in my view, guys, is because these GLD SPY and QQQ options may get a little more expensive before a big event like the jobs report or a federal rate decision day. It's not nearly as expensive as options on stocks get before earnings. Okay, so hopefully you see that. That's understood. Explain that clearly. Are the sessions recorded? I think so. Okay, kind of cycling through some questions here. There's a lot. I don't look at gold seasonality. I just look at what it's doing in recent weeks. So I started this service, guys. People want to know like time frame of the service, the lifespan of it. This service was started. So I guess I'll put some color to this. So I started this service. Well, I started as a course. So I put together this course. I discovered this worked, and I was like, this is really cool. This really works. So I'm gonna do a course. So I put together a course, and I offered that to my people on my email list, my subscribers on my other services, and they bought it like crazy. It sold like crazy. So I was like, I started getting these emails from people wanting me to alert them to the trades. Like, hey, Matt, great course, learned a lot. Any chance you could alert us to these trades? So that's what I did. So it evolved from a course into a trading service, right? So that was spring of 2016, and so here we are, 3 years later, and still going strong. Risk management, how do you do that? So Alice says, how do you exercise? So in one of the email examples, there was a little glimpse into that. Let me see if I can find it. A little glimpse into my risk management. All right, here it is right here. So after the jobs report came out in early January, I sold my SPY puts as a losing leg, and I'm holding on the calls with a stop at 220. So the logic behind this was that it was going to limit my loss, right? A lot of times what I'll do is that when I'm in the green on the winning leg, I'll put a stop loss just right at the area where it would go from a winning trade to a losing trade, right? Because we don't like letting winning trades turn into losing trades, right, guys? So what I'll do is place a stop loss, on the winning leg to let it kind of run, because a lot of times it will run throughout the rest of the day on a jobs report Friday. And if it gets executed, sometimes that happens. But that's how I use risk management. Place a stop loss on the winning leg. Right? That being, are you going to show us the strategy? Hopefully, you guys feel like I shared everything in the strategy. All right, does the course cover how to place your strangles, etc., and which company should you use to trade with from the UK? From the UK. Maybe is anyone here from the UK that can share with Roseanne where to trade options on the US market if you live in the United Kingdom? Because I don't know. How do you pick strike prices? Good question. Okay, Chris says Interactive Brokers works from the UK, Roseanne. So if you're living in the United Kingdom, you want to trade this, you have to get an account with Interactive Brokers, which I have one. All these screenshots that you're seeing are from Interactive Brokers. How do you pick strike prices? So I want to get strike prices that make sense. When I buy the straddle or strength, so we're kind of getting into some of the things that are in the course, and that's okay. So say if I want to do a strangle on the QQQ, and it's at 173, or say it's at 172.75, I'll buy a strangle with a 173 calls and 172.50 puts. I think I said that right. So the goal here is to pay equal amount or just about equal for the calls as you do the puts. So you're kind of, hey, I can make money if there's a big move either way, right? I'm not leaning bullish, leaning bearish. I'm just kind of ready to make money as long as it makes a big move either way. All right, so here's the free trade setup. Jack says, what was the free trade setup? Awesome. Okay. All right, so the free trade setup, guys, this morning. Okay, let me get back to the slide I need to be on. So TradeThirsty.com/Fed to get this offer, either a full year for $497 or 6 months for $297. Okay, so the free trade setup is this coming jobs report. So for the February jobs report, so it'll be the first Friday in March. What you guys, the trade setup there is the best performer lately has been QQQ. If you maybe kind of noticed that from my notes. So what I'll do is get a strangle on QQQ that expires that Friday. So it's only 1 day left in time value. And like I just explained, say if it's at 173 or 172.75, I buy a strangle. 173 calls, 172.50 puts. Or if it's pinned right at 173, I might just buy a 173 straddle because that'd be easier, right? So the goal is to buy, again, strangle or straddle where the calls and puts are similarly priced, and also where the expiration is very, very, the most near-term expiration, right? Just got to be careful with like when, on SPY, there's options that expire on Wednesdays. You got to be careful that you don't buy those by accident. So yeah, I use nearest term expiration, and I try to pay an equal amount for my calls and puts as close as to get as equal as I possibly can. All right, these aren't ratio, where I buy more calls than I do puts, or if I'm buying. So I'm buying, if I do a strangle, I'm buying, same amount of calls as I do puts. All right. So again, guys, this is exclusive bonus you get is a look over my shoulder live trading. Any more questions? I think I have about 8 minutes. When do you exit the losing side? So Carol says, when do you exit the losing side? So sometimes I do exit the losing leg the day of. So let's talk hypothetically. So if there's a Fed rate decision coming out at 2 p.m., the market's going to react violently right at 2 p.m., 2:01, 2:02 p.m. Eastern. And so what I'll do is I'll give it at least 10 minutes. And then once I think the market has picked a direction, I may sell a losing leg and then hold the winning leg overnight on a Fed rate decision. So that's a little different than a jobs report trade. A jobs report trade, I'm buying a straddle or strangle post 2 p.m. Eastern, so with 2 hours or less to go in trading, so I don't pay too much in time value for that strangle or straddle. And then on the jobs report trades, I'll have to hold both legs overnight because why? Because the data doesn't come out till the next morning, right? And the options markets don't open until 9:30. Jobs report comes out at 8:30 a.m. Eastern. So I have to hold both legs overnight. So there's a little bit of a difference there between the jobs report trades and Federal. So same thing, like if I want to trade a straddle or a strangle on CPI data, I have to buy that right before the close the previous day, and then the data comes out at 8:30 in the morning, and then I make a decision on closing out the winning and losing leg as soon as the market opens. So you got to be flexible. You know, JT says, great presentation. Looking forward to the service. Thanks, JT. So sometimes the losers, you know, there are losers. They, you know, the percentage for the losers, somebody that's what the percentage is for the losers. You know, sometimes there's 30% losers, sometimes there's small losses, 10%. Other times, you know, they're 50% losses, right? I mean, it's just, you know, if you don't get a big enough move, guys, you know, the alphas decay quickly. But the reason why this works overall is because I'm, you know, I'm kind of clustering these straddles and strangles around these big events, right? Again, these are unique from trading straddles and strangles around stocks before options. If you go do that, guys, around options, around stock trading, I'm sorry, strangles and straddles around earnings for stocks, you're going to have a hard time unless you really find a big report that the market is just like super, you know, excited about. Like I think this last, no. Let me see. Amazon didn't have a big enough move. See, like this last move on Amazon, it went down after earnings, right? That wouldn't have been big enough to make money on with a strangle or a straddle. You'd have lost money even though it went down. So, it has to be a really big reaction to be able to make money with a strangle or straddle on an option on a earnings event. So this is why this is different, because I'm using ETFs that don't get as expensive as individual stock options before earnings, and I'm using them around Federal Reserve related events or specific events like the rate decisions or CPI or different things. You know, there's also some scenarios I didn't even discuss, and that's like the Brexit. Remember the Brexit? The Brexit trade, guys, was 400% wins on GLD strangles overnight. So there's special, you know, situation. I traded and alerted the 2016 election. So GLD strangles were in profit there, as well as SPY, as well as QQQ. Big winners. And so, you know, that's where the, you know, the service really kind of, you know, the kind of the gravy about the service is that not only this regularly scheduled events, but I'm also going to keep you alerted and up to speed on special events that come about, right? And alert trades on those special events that maybe you wouldn't have thought about, you know, on your own as something that you could trade a, you know, QQQ strangle or a SPY or a GLD strangle around, right? Because you just weren't you know, kind of closely watching it like I was, right? So that's what you guys pay me for, you know. That's what you guys pay for the service for, because I want to provide value that you yourself may have not have been able to, you know, seize an opportunity. So I'll bring that opportunity to your attention, right? All right, David. So hopefully I answered your question. How long is this offer good for? For the duration of the webinar and however long they want to show the replays for at Webinar Expo. Okay, somebody wants to see, David wants to see GLD chart on slide 59. This one. Yeah, so this is like, you know, so I gotta stay flexible. Sometimes I didn't buy a straddle, or, you know, sometimes I'll deviate from that on GLD, because like I said, GLD is a tricky beast. But for the most part, it's going to be straddles and strangles of trading around these big events. All right. Okay, so Bob wants to know, how can you trade the China deal? So that's kind of, that situation is evolving. So March 1st was the deadline, but guess what? We found out late yesterday. Trump and President Z, how do you pronounce that? I don't know. President XI will be meeting in Mar-a-Lago in late March. So that kind of got kicked down the road. But you know, that's one of the situations where details are going to be slowly leaking into the market. So that may or not be strangle or straddleable, so to speak. But if it is, I'll for sure put a trade out on that. All right, what slide, what GLD trade? Because there's a few on here. I don't know which one you want to see, David. Plus, you can just look at the replay too later. So TradeThirsty.com/Fed, guys, to access this deal. Again, you might say, Matt, hey, great webinar, this, that, and the other, but I only want to do 6 months. That's fine. It's $297. It's a little bit better of a deal to do the full year's worth. But I understand sometimes you might just want to go for the little bit cheaper option. So $497 for a year or 6 months for $297. TradeThirsty.com/Fed.